Monday's market closes mostly higher except for wheat futures. Alan Brugler with Brugler Marketing joins us with analysis. And Alan, let's talk about kind of the leader in the grains, which was soybeans today. And, was that just maybe a short covering bounce or an oversold bounce? Because we did have a pretty big down week last week.
Yeah, I think it was short covering. It was a little bit of an overreaction on Friday. We do have some seasonal weakness here coming down into the 1st of October. That's pretty normal, but 40 cents on a 30 million bushel revision in the stocks number is a pretty excessive reaction. I think it was aggravated by the end of quarter uh, closeouts by some of the funds and just a reluctance to go long ahead of the weekend. So you got a nice little bounce on Monday, short covering, and also a little bit of a lift in the energy complex that helped the soybean oil.
Yeah, both soybean oil and soybean meal were higher. That certainly does help with the lift. But soybean oil, was that market just following crude oil?
There's a pretty strong correlation right now between the bean oil and the crude oil. It's a much tighter fit than it has been historically speaking because we're getting more biofuels production out of bean oil. It's the only growth area of the bean oil consumption right now, and given the level of diesel prices and the incentives, we think it'll continue to be well supported.
Yeah. So it was a risk on day with crude oil up, the Dow up, the dollar weaker. So did corn just follow crude oil, or was it helped by soybeans, or what was going on there today?
I think corn got helped by a couple of things. First of all, you cut the grain stocks by on Friday. That was basically a 1.8 bushel yield cut to the new crop, if you want to think of it that way, in terms of reducing supply. And I think the trade in general is still thinking that the U.S. yield might be a little lower than what NAS used last month. So you're tightening up the yield on both ends. So it makes sense that corn rallied on Friday and got a little follow through. The fuel aspect certainly helped. We're seeing some very aggressive basis bids by the ethanol plants.
So are we going to eventually get and stay above that $7 mark, do you think, or not?
Well, the market surely seems reluctant to do that. We've seen a swing at 6.99. We've seen a swing at 6.97. You've got pretty good resistance just under that round number. We have a Head and Shoulders bottom count that's at 702 or 703. So that's where we're trying to get to. And maybe if we got through it, we could go into the 720s. But yeah, there's some pretty substantial resistance here. We have to remember we've still got 14 to 15 billion bushels of crop coming out of the field. The market doesn't need all of it at once here, and that's probably a limiting factor.
Yeah. So what are you thinking about yield as we go into the October WASD for both corn and soybeans? Is it getting bigger or smaller? What do you think?
Well, if you go on anecdotal reports, you can get just about anything. You get, oh, it's better than expected, or
Yeah.
no, I thought it was bad and it is bad. It's all over the place. Our crop condition model, our Brigler 500 model, basically says 170 is pretty close to where we'd be. That's still plus or minus 3 bushels, but that would be down if it hits the center point. That would be down from where we were in
Yeah.
September.
So the wheat market looked kind of tired today. So did we just see some profit taking there? I know we do have a little bit of forecasted rain in some of the winter wheat belt, but that looked pretty far out.
Yeah, I think the wheat has a nice seasonal bottom in place. We've seen a retracement in at least a couple of the contracts, 38% retracement of the decline. That's a typical post-harvest rally. I think it's being driven by uncertainties about exports out of Ukraine when the UN deal expires or comes due for renewal. We're seeing some improvement in Russian grain exports, but they're also limited by some of the sanctions and the financing issues. So, the U.S. would like to see a little bit more wheat export sales on the books here, but again, it's positive technical action so far.
Gotcha. What about this cattle market? So a nice update here today after a down week last week where it felt like the funds finally kind of pitched in the towel with these recessionary fears. But do you think we can build on today's little bounce?
I think we got too cheap because the funds were bailing. There's those demand concerns are legitimate. Consumers are being squeezed a little bit here with the inflation in a lot of areas. Gasoline prices came down, but they're nowhere near where they were a year or two ago. So there's definitely some concern there. But the flip side of that is, given where we are in the cattle cycle, we're going to have tighter and tighter numbers going forward. And so you have these short-term concerns about beef demand, but in the long run, you'll have scarcity of supply, and the market's just doing a balancing act as to when that all unfolds.
Yeah, and boxes were up pretty good today. Do you feel like the cutouts have bottomed here as well, or not?
It feels positive, but I try not to go on 1 day or 2 day swings because some of those wholesale quotes are pretty volatile.
And in the hogs, we've had massive fund liquidation there as well. Commitment of Traders report showed that they had liquidated like over, 35% of their long position. So is that enough to take some relief off of this market?
Yeah, the December hogs just flat out collapsed. That was the fund selling panic, if you will, of a $12 drop in just a matter of days. That you have to assume that that's an overreaction. We still have the concerns about fourth quarter demand. I think again recession related, but and the fact that the cutouts normally are coming down this time of the year, but that does certainly seemed to be an overreaction. We got a little bottom picking action on Monday.
The lower demand or the concerns about demand aren't going to be offset by the lower supply then?
Well, the Hogs and Pigs report did show us a little smaller numbers out there, both on the breeding side and on the market hog side. So you have to recalibrate your expectation of how low things could go. Uh, we thought we'd get more of a bounce on Friday than we did, and so maybe this is just a delayed reaction that we were waiting on the crop report to get out of the way.
Well, that's kind of what hogs do sometimes. Thanks so much for joining us, Alan Brugler with Brugler Marketing.